Thank you again for tuning in to our Retirement Education Center YouTube channel, where on this channel, we believe in providing you unbiased advice to help you maximize all of your retirement income. Now, on our channel, we do not believe in providing you any silver bullet strategies, and we certainly do not glorify any type of one product. But what we do believe in are holistic concepts that will help you retire with confidence. Now, the first thing I want to say is Happy New Year's to everyone. Welcome to 2023.
Happy New Year.
Thank you. So now we want to make sure that today we cover some of the most important numbers that you should be focusing on in 2023 as it pertains to your retirement savings. You know, we try to do this every year, Andrea, provide updated numbers for our subscribers and of course our clients. So you're definitely going to want to stay locked in today as we are going to cover the most significant numbers for your retirement savings for 2023. Hi, my name is Carson Graves, President and CEO of the Retirement Education Center.
And my name is Andrea Graves, Director of Operations at the Retirement Education Center. And we want to thank you for tuning in to our Retirement Education Concepts videos. These videos were created to help to make the difficult and confusing retirement process simple.
Absolutely, Andrew, because with so many retirement products out there, so many retirement concepts and so many retirement strategies, it can become very difficult for consumers to digest it all. That's why we're so fortunate that we're able to work with a team of expert advisors to help us build a financial roadmap that will let our clients know when, where, and how they can reach their retirement goals.
For additional concepts on how to maximize your retirement, please subscribe to our YouTube channel and hit the notification bell to be notified when we upload new videos. Well, Carson, it's New Year, and I know there's so many changes for retirees, but what insight would you be able to provide us with for the year 2023?
Yeah, of course, Andrea. As you know, every year we try to make sure that we keep our clients updated and informed about any changes that's going to affect their retirement savings. And of course, we want to keep our subscribers informed as well, since they're actually taking an investment in their education as it pertains to them trying to save their money and grow their wealth as well. So today, Andrea, I do plan to cover some significant changes as it pertains to different facets of the retirement planning process. But before we get into that, there are always two rules to retirement income that we like to give you. And Andrew, what are those two rules?
Well, rule number 1 is to never run out of money, and rule number 2 is to never forget rule number 1.
Absolutely. So let's go ahead and dive into our lesson today as we update you on the important retirement numbers that's going to be concerning you for 2023.
So Carson, let's start with taxes since we are in the tax season. What can you update us about that?
Yeah, of course, as always, when it comes to taxes, when we're in the tax season, we have to be updated on what things we can do and what changes are being made for the new year. And as always, there are some changes and there are things that you should know about and take advantage of as well, Andrew. So what I think is always good, like I did before, is that I'm going to share my screen so that everyone can actually see, where they may land in certain situations. We're not going to go over every category, so you can see on the screen where you may land. But let's go ahead and transition to that, and then I can tell you about some of the notable things that you're going to need to update when it comes to your taxation. So Andrew, as we're taking a look at the screen here, as you can see for 2022, there are some notable things that are changing about our income tax brackets. In 2022, I'm not going to go through every line, of course. I'm just going to go through maybe the most common area that we may sit, the average, income earner. So let's look at the 22% tax bracket for 2022. I want to make note that every tax bracket is changing, but I'm just going to focus on that tax bracket for this lesson today for brevity. So Andrea, if we look at 2022, and you were actually in the 22% tax bracket as a married filing jointly couple, you can make anywhere between $83,550 to $178,150. And as a single person, you can make $41,775 to $89,075 and remain in that 22% tax bracket. Now, if you take a look at 2023, you can see that you can make more money. Now, as a married filing jointly couple, if you made between $89,451 and $190,750, you will remain in the 22% tax bracket. And as a single person, if you made $44,726 to $95,375 a year, you can also remain in the 22% tax bracket. So why is that important, Andrew? Because we can clearly make more money this year, but not be taxed on that extra income. So that is absolutely a good thing. One other additional thing about taxation, Andrea, that I want to make note of is that if we take a look at our standard deductions for 2022 and 2023. So for 2022, you can see that if you were filing jointly, that you can actually deduct $25,900. And if you were 65 and older or blind, it will be an additional $1,400 that you can actually deduct from your income. As a single person, it was $12,950 and $1,750 if you were actually 65 and older or blind. As we transition on the chart, we can see that in 2023, those numbers have gone up. Now, if you're married filing jointly, you can deduct $27,700 and $1,500 if you're 65 and older and blind. And for a single person, that number is $13,850 and $1,850 for a person who's 65 and older and blind also, or filing head of household as well. I just want to point that out. Now, why is that important? Because not only can we make more money and not be taxed more on the money that we're making, we can deduct more from that income as well. So that's a good thing also.
Carson, thank you for the notable changes about the tax updates. So we know that Social Security is always a mainstay for retirees. So can you give us any changes on this program as well?
Yeah, absolutely, Andrew. I always look forward to helping people understand the changes that are going to be taking place with Social Security because, of course, when I'm doing financial plans for my clients, this is a major income source that we have to make sure that we get right. So once again, I'm going to go ahead and take our attention to the chart so we can point out some of the notable changes that you should be aware of. So Andrea, if we're taking a look at the chart for 2022, you can see on the chart it says wage base and it says $147,000. What that means is that you are actually being taxed at 6.2% from your employer on income for Social Security on wages up to $147,000 in 2022. Obviously, if you look at that chart, and this will not change, for Medicare, there are no income limits. The 1.45% that you're also being taxed on your income for Medicare, there is no wage limit. You can make $500,000 a year and you will still be paying the 1.45% for Medicare. Another thing that I want to take note of for 2022, the cost of living adjustment was 5.9%. So now let's transition to 2023. Now you can see in 2023, the wage base is actually increased to $160,200. Now, some people may see this as a negative, but to be quite frank with you, Andrea, that wage base is going to be indexed every single year and it's going to increase every single year as well. And this is actually a positive thing if you want to keep Social Security solvent. So the wage base for 2023 is $160,200, meaning that now they're going to be able to tax you on that 6.2% for Social Security on income up to $160,200. Also, a notable change for 2023 that we've talked about before on prior videos, the cost of living adjustment is now 8.7% for 2023. Okay, we got that down, and that's going to be some really unique changes that I think people should be aware of. Now, let's transition over to another Social Security topic that we discuss in our classes all the time, and that's the earnings limits, Andrea, for Social Security benefits. This is going to apply to those of you who are going to be taking your benefits before your actual full retirement age. That is the only thing that the earnings limits are going to apply to. Now, if you look at 2022, you can see that if you take your Social Security benefits in 2022 before your full retirement age, if you made over $19,560, the Social Security Administration would hold $1 for every $2 that you made over that limit. And once you got into the year of your full retirement age, if you made over $51,960, they could withhold $1 for every $3 that you made over that amount. Now, keep in mind that once you reach your full retirement age, you can make as much money as you like, and there will be no withholdings of your Social Security benefits. So let's now transition to 2023. As you can see, the earning limits have changed. Here, if you actually start in 2023, your Social Security benefits before your full retirement age and you're still working, if you make over $21,240, that is the moment in which they can start withholding $1 for every $2 that you make over that limit. And in the year you reach your full retirement age, if you made $56,520, that's when they can withhold $1 for every $3 that you make over that amount. Again, once you reach your full retirement age, there will be no withholdings of benefits. So here you can see this is actually a positive change. Now you can make a little bit more money without having any of your Social Security benefits being withheld from you.
All right, Carson, thank you for that explanation. Now, Medicare and Social Security are basically teammates. So what can you tell us that's new that's coming out with Medicare?
Yeah, Andrew, I absolutely do want to point out some of the notable things about Medicare too for 2023 versus 2022. So this is going to be important for you to understand also. So let's go ahead, of course, and direct our attention to the screen so we can see some of the notable changes for Medicare as well. So let's go ahead and start out with 2022. One of the things that I want to point out on the screen is that when you see IRMAA, that's IRMAA, what that means, the IRMAA surcharges, we're going to talk about that. That stands for Income Related Monthly Adjustment Amount. I repeat, Income Related Monthly Adjustment Amount. This is a surcharge on your Part B premium. So let's look at 2022. You can see that your Part B premium is $170.10 for 2022. So I want to take your attention down the chart on 2022 where you can see your 2020 modified adjustment gross income. If that modified adjustment of gross income in 2022 was less than $182,000 and you were married filing jointly, or less than $91,000 as a single person, you did not pay any IRMAA surcharge on your Part B or Part D premium. Now, as you can see, if you had income that increased between $182,000 and $228,000 in 2022 and $91,000 and $114,000, you can see on the chart that your Part B premium and your Part D premium would actually have that IRMAA surcharge attached to it of $68 on your Part B and $12.40 on your Part D. Now, this is very important to understand because as your income increase out of those different ranges that you can see on the chart, those surcharges can continue to increase also. So you want to make sure that you understand this very clearly. Also, you can see on this chart that this is based off of your 2020 adjustment gross income. They look 2 years back. So now I want to take your attention to 2023 and what's changing with Medicare here. Here on the chart, you can see that your Part B premium is going to be $164.90 for 2023. So Andrew, that is a positive change. Some may ask why? Why are they actually giving us money back? That seems unique. We don't ever see the government do that, right? Well, here is a situation where they actually had what we call a contingency cushion set up for your Part B premium due to a very expensive drug called Aduhelm. Now, the drug Aduhelm is a drug that's actually set to help alleviate the conditions of Alzheimer's disease. What they found is that they did not have to actually spend as much money on this drug and other areas of Medicare too as well that went into this, and therefore that contingency cushion was able to be given back to the Part B participants. So that's a good thing. So you will be paying less this year for your Part B premium. Another thing to note is that you can see on the chart, your modified adjustment gross income is now going to be based in 2023 on your income for 2021. So if you had some changes in your income, a lot of things could actually be coming your way. Not only could you have a decrease in your Part B premium, but because of the income limits for your IRMAA surcharges, you may also, if you were paying a surcharge in last year, you may no longer have to pay that surcharge because, as you can see, for 2023, if you made between $194,000 and $246,000 as a married filing jointly couple, that is when that surcharge would kick in. And you can see that surcharge is actually lower than it was in 2022 as well. And if you're single, if you made between $97,000 and $123,000, that is when the surcharges would kick in for your Part B and Part D premiums. So we want to make sure that you know about this because that is going to be a positive change that's coming your way for some people who may either have been experiencing an IRMAA surcharge due to the income, or for those of you who may not know that your Part B premium was actually going to be decreasing in 2023 as well.
Now, Carson, the last thing that I'm sure that's on people's minds is how is my retirement plans going to be changing?
Yeah, Andrew, you can say that maybe I saved the best for last. I'm not sure because all of these things are important that we're talking about. But retirement planning is critical for anyone who's trying to retire someday. And there are some very big changes that are going to be taking place as it pertains to how you can save for your retirement. So let's go to the chart one last time and look at some of those notable changes so you can be aware of what you can do for 2023. So the first thing I want to point out is for 2022 so you can understand the differences of what's coming your way. If you can see the chart, if you were participating in a company's retirement plan like a 401k, a 403b, or a 457b, you can see that your contribution limit for 2022 was $20,500. And if you were 50 and older, you had a catch-up clause of $6,500. Now for 2023, they're allowing you to save more in those retirement plans. Your contribution limits for 2023 is $22,500, and the catch-up, if you're 50 and older, is now $7,500. So you can see you're able to save more. Also, as you can see, if you're actually in a 403b plan, you're going to want to check with your plan administrator because you also have a special catch-up clause if you have 15 years or more service, where you can put in an additional $3,000 into that 403b as well. Okay, now let's go ahead and take our attention to what's changing with traditional IRAs and Roth IRAs. So this is always important because we know that billions upon billions of dollars go into these types of accounts every single year. So let's take a look at 2022 first. Your total contribution limit in a traditional or Roth IRA in 2022 was $6,000, and if you were 50 and older, you had a catch-up clause of $1,000. Another thing to take note of is that if you wanted to contribute to a Roth IRA, you did have an income limit. If you made over $144,000 as a single person, you could not contribute to a Roth IRA. And if you were married filing jointly and you made over $214,000, you could not contribute to a Roth IRA at all. The next category that I want to point out is your deductibility of your traditional IRA if you're actually covered by a work plan. So if you are single and you're covered by a work plan, you could not deduct the contributions to that traditional IRA if you made over $78,000, okay? So if you did make between $68,000 and $78,000, you can actually deduct the $6,000 that you may have contributed to the traditional IRA if you actually were under a work plan as well. If you were married filing jointly and both of you were actually under a work plan, if you made over $129,000 in 2022, you could not deduct that traditional IRA contribution. Now, if only one of you, this is important to note, if only one of you were covered by a work plan and one of you were not, if you made over $214,000, that was the phase-out limit in which you cannot deduct that contribution, the spouse who was not covered by the work plan, okay? All right, so let's go ahead and transition to 2023 and see the differences. In 2023, as you can see on the chart, your total contribution limit for a traditional IRA or Roth IRA went up finally. You can now put in $6,500 into that traditional or Roth IRA, and your catch-up clause remained the same. If you were 50 and older, you can still put up to $1,000 for a total of $7,500 into your traditional or Roth IRA in 2023. Also to note, as we move down the chart, your Roth eligibility has also changed as far as the income. If you are a single person in 2023, your income limit is now $153,000 before you can no longer contribute to a Roth. A very good thing. You can make more income, Andrea, and still contribute to a Roth IRA in 2023. Married filing jointly, that also went up. You can now make over $228,000 as a married filing jointly couple and still contribute to a Roth IRA. Now, your traditional IRA deductibility, that income also changed for the phase-out limits. If you're single now, and you're covered by a work plan, just keep that in mind. This is very important. If you're covered by an employer work plan like a 401k, 403b, and such, if you made over $83,000 as a single person, you cannot deduct that contribution to your traditional IRA. If you're married filing jointly, that income is $136,000. It did go up. That's a positive. But just note that if you make over $136,000 as a joint couple, you cannot deduct that contribution to a traditional IRA. Now, in 2023, if only one of you has a workplace retirement plan, then that means that deductibility for that traditional IRA will be income of $228,000 in 2023. So just make these notable mental notes, or save this video and reference it again when you're contributing to your traditional or Roth IRAs for 2023.
Now, Carson, that's great information for the start of 2023. So thank you for your insight on that information. And thank you for watching. And if you felt this information was beneficial for you, please like and share this video with others.
So I really do hope that the information that we shared with you today will be beneficial to help you move through 2023 with your retirement savings appropriately. Please understand that these videos are created for educational purposes only, and that you should always seek out your own financial advisor, your own tax advisor, and your own attorney regarding your personal situation. Also, if you are looking for a fiduciary financial advisor to help you with these types of complex financial matters, we highly recommend that you utilize the links in our description below and go ahead and schedule a complimentary 1-hour consultation with us today.
For more information about this topic or any of the other topics that we've shared in our other videos, please feel free to reach out to our office or leave any questions or comments in the section below. After this video, please check out our other videos that will give you tips on how to maximize your retirement. And if you like this video, please give it a thumbs up, subscribe to our YouTube channel, and share it with a friend. Thanks for watching, and remember, if you have questions,
we have answers.